I am starting a series on some accounting basics. So today we are going to cover the accounting equation, and then we are going to go into the financial statements, how to read them, different account types. We'll go into those in a later video. So starting with, what is the accounting equation? The accounting equation is assets equals liabilities plus stockholders' equity. This holds true 100% of the time. Assets equals liabilities plus stockholders' equity has to be true. If your balance sheet equation or accounting equation doesn't balance, that means something is wrong. So your assets, those are what you have. Everything you have. If you think about your life, anything you have, your car, your backpack, your computer, all of those things are assets. They can be tangible, meaning you can hold them, feel them, touch them, or they can be intangible. So things like software, software is the big one, patents, those types of things are intangible. You can't necessarily hold them, feel them, touch them. Now, the other side of the accounting equation is how I think of how you finance those assets. So your liabilities are what you owe. Your equity is whatever is left over, residual ownership. I'll get into equity here in a minute. Liabilities, what you owe, that's things like debt. So if you take out a loan to buy a car, if you're a company, you take out a loan to finance a purchase. That means what you got, your assets, went up. That means your liabilities, what you owe, also went up. Again, your accounting equation stays in balance. Your stockholders' equity is residual ownership in the firm. So that's going to say things like, do you have ownership elsewhere? Do you have stockholders? How much of your company is owned internally? That is more retained earnings. I'll talk more about the statement of stockholders' equity and that all later. So it's just telling you what you have and how you financed it. All of this can be found on the the balance sheet, and that is going to be a snapshot of all of the things you have at any given point in time. So if you look at a balance sheet for a company, you will see everything they have, all of their debt, all of their ownership in the firm. That's the accounting equation. It can be found on the balance sheet. Remember, your balance sheet equation or accounting equation, they're the same thing. They always have to stay in balance. We'll talk more about how the changes happen later, but that is your accounting equation. You have to know it before you can go anywhere else in accounting. All right, let me know if you have any other questions.